What if I told you the self-assessment tax return you're about to submit has three mistakes on it, which means you'll pay £500 tax instead of getting a £500 refund that you're entitled to, along with getting yourself a fine from HMRC when they tell you to resubmit it in 6 months' time because it was wrong. So in this video, I'm going to show you the exact mistakes I found on my client's self-assessment tax return that would have left him £1,000 out of pocket, the one that would have flagged him to HMRC, and the one that most people don't even know is a mistake. I'll show you how to check for all three on your own return before you submit it. And at the end, I'll tell you the one thing my client should have done differently from day one that would have avoided this altogether. And if you want me to review your self-assessment before you submit it, or if you just want me to complete your whole return for you, then head to the link below and book in your free call with me. So a few days ago, I got a call from someone, let's call him Dave, who had completed his return, but he was so worried that he'd done something wrong, he asked me to double check it before it was submitted. So I started to look at it and I thought it would make a good video, so here we are. I thought a lot of you could benefit from watching an accountant go through this return, and you could use it to check your own return. So let's get into it. So one of the first things I get my clients to do when they come on board with me is I get them to complete a short Google form which answers all the questions I need to know about their specific situation in order to complete the self-assessment. This form covers everything, takes no longer than 5 minutes, and has saved so many of my clients from getting a fine from HMRC. Right, so I've got the return up here, and David's employed working in construction, and he's got a small bit of self-employed income on the side from selling things on eBay. But let me just go through the return and take out all of his personal information out so he doesn't get his identity stolen by one of you like watching the video. Right, so this is Dave's current situation in his tax return. I haven't changed anything that he's done, so let's go and look at his tax calculation to see what we're working with. So you can see here he owes HMRC around £500, which might not sound too bad if you're him, but we're going to take this tax return from owing £500 to actually getting £500 back using all completely legal methods. So because of how Dave answered my form, the first mistake I see is this question right here. Did you or your partner get child benefit payments during the tax year? This also applies if the child living with you is not your child. Well, I guess the first question is like, what does this question actually mean? So the HMRC child benefit is a monthly or weekly cash payment from the UK government for people who are in charge of bringing up a child, which helps pay for the cost of raising that child. Now, the higher income child benefit charge is a way that HMRC claws back some or all of that benefit if you or your partner earn over a certain amount of money. But Dave isn't the one that claims the child benefit, his partner does. So on his tax return, he didn't put anything down about it. As far as he's concerned, it's got nothing to do with his tax return. But why does it matter if he's not the one who's receiving it? Well, HMRC don't really care who claims the benefit, they care about who earns the most money in the household. If Dave's income is over the threshold, which is currently £60,000, he's the one who has to declare it and pay the charge back, even though payments land in his partner's bank account and not his. Now, this is the one that catches so many people out because there's no obvious trigger. Nobody sends you a letter saying that you need to pay this charge. You just expect to know. If your household income crosses that line and you don't put it on your self-assessment, then HMRC will eventually catch you, and then you're paying it back, plus explaining why you didn't declare it in the first place. So this right here is a mistake that would have landed Dave with a letter from HMRC telling him that his self-assessment was wrong and he needed to do it again. HMRC already has all of his and his partner's data, so it would be easy for them to see that they haven't paid the benefit charge. So I guess the question to ask yourself isn't, do I claim the child benefit? It's, does anyone in my household claim it? And am I the one earning the most amount of money? If it's yes to both, then this box needs completing. Right, so once we say yes to the child benefit payments, it will then ask if your adjusted net income was over £60,000, which is your total income before any personal allowance is taken off. Now for Dave, this is yes, and then it will ask whose adjusted net income is higher, you or your partner's, and in Dave's case, it is him. So these options will then add in a new section of the return that we need to complete. So you enter the amount of children you or your partner got child benefits payments from in the tax year, and then you say if you received it for the whole of the tax year, and then it will calculate the total amount of benefit that you received. So if you don't agree with this figure, then you can change it, but most of the time it will be correct. So you then enter the number of children you're claiming for after the end of the tax year, which could be different from the amount above if you started to claim for more children or stop claiming it altogether. And then you then hit save and continue. So if we just go to the tax calculation page, you will see that this has actually increased the amount of tax that he owes to £1,200. So you're probably thinking, well, you've said he's gone from owing £500 to getting £500 back, and it's not looking good so far. Well, prepare for your mind to be blown because it's about to happen. Before I start to make the real magic happen though, there is something I noticed when going through Dave's return, which is the mistake that most people don't even realize is a mistake. Throughout the whole of the return, there's loads of questions that HMRC marks as optional, meaning you don't have to answer them if you don't want to, or if they're not relevant to you. But they've pretty much answered all of these. When you answer these questions that aren't relevant to you, what you're doing is you're increasing your chances of getting something wrong and getting hit with a fine. Because the more information you give HMRC, the more chance they have to notice inconsistencies and then question you. There's a simple rule to follow here, which is give HMRC as little information as possible. If you answer the minimum amount of questions that you need to and give them just enough information to keep you on the right track, then there's so much less chance of slipping up and getting caught out. And if HMRC do want any more information, then they can always contact you and ask you. So my general rule is anything that says optional, leave it blank. Right, so moving on to the real magic now, let's take a look at Dave's employment income. So what I noticed when going through this and speaking to him about his job is that he hasn't included something in here that's wrong, but it's something that he's left out which can save him a decent amount of money. And it goes in this box down here where it says, do you wish to claim any employment expenses? So what has Dave left out in this box? Well, because he works in construction, is constantly moving around to different sites and uses his own car to get there, he's actually entitled to mileage allowance relief. Now, the mileage rate for the tax year we're doing is 45p a mile for the first 10,000 miles and then 25p per mile after that. It's worth noting from the 26-27 tax year onwards that 45p per mile is increasing to 55p per mile. And Dave's employer doesn't give him any money towards his travel, so he can claim the full amount. But if they did give him an allowance, let's say they paid him 30p per mile, then he can claim for the difference. So luckily, David kept a note of the sites I've been working on and on what dates, and so was easily able to give me a mileage figure to claim. So if we say yes to this question, it will then take us to the next page where we can put in some figures. So I've calculated Dave's business travel claim based on the mileage figure he gave me, which goes in this top box here. And the box underneath is also a cheeky one that you can put in, which is a fixed deduction for expenses. Now, a lot of people don't know about this one, but HMRC gives everyone a fixed amount every year that you can claim for things like washing your clothes. Now, they do have a list of the jobs and how much you're entitled to claim, so check out that list to find your amount. So this one's not about avoiding a penalty, it's about money being left on the table. Dave wasn't at risk of anything by leaving this blank, he was just quietly overpaying tax by not claiming for something he was entitled to. So if you're employed and are using your own car for work journeys that aren't your regular commute to a fixed place, then check whether you're being reimbursed properly. Because if you're not, you're definitely overpaying tax. Now, I'm not going to show you the impact that this has had on his tax calculation just yet, because there is another huge mistake that I noticed that's going to save Dave loads of money, and it's in his self-employment section. So we can see here that he's put his income in from the eBay sales at the top, which is all good. And then at the bottom, he's put in his expense figures, which again are all good. And there's nothing wrong about this. But what he has done is he's left loads of money on the table by not using this box here, which is the trading income allowance. So what's actually so bad about this? Well, even though the actual expenses he's claimed are legit, what he didn't realize is that instead of claiming the actual expenses, sole traders can choose to take the trading allowance instead. Now, the trading allowance is a flat deduction you can take instead of adding up all your real expenses. Now, what makes this even better is you don't need a single receipt to claim it. So Dave's actual expenses were around £100, but the trading allowance is worth 10 times that. This right here is the one that shows the difference between a return that's technically correct and one that's actually optimized. As I said, Dave didn't do anything wrong here. He just didn't know he had a choice and he took the smaller number. So if your actual expenses are under the £1,000 trading allowance, always take the allowance. So you can see here when we take out the actual expenses and put in the £1,000 trading allowance, it brings the net business profit for tax purposes down to £277. So apart from these bits, the rest of the return was all good. So let's go and see what his tax calculation is now saying. So you can see here that Dave is now due a refund of around £500. This is because his income from his employment is lower because we've claimed for the travel expenses and fixed deduction. And his income from self-employment is lower because we've claimed for the trading allowance. Remember, we've also added in the child benefit charge, which increased it by £500. But despite this, Dave is still getting a refund of around £500. Now, this money will land in his account a few days after submitting the return, and he can go and spend it on whatever he wants, which is probably going to end up on nappies. So what's the one thing that Dave should have done differently that would have avoided all of this? Well, it's actually two things. And the first is that he could have just come to me before he wasted any of his own time completing this return and got me to do it for him. He could have stressed way less about worrying if he'd done something wrong, and he could have spent that time doing something he actually wanted to, like taking his kids to the park. Second, you should have watched this video here where I walk you through the exact steps on how to complete the return from start to finish and pay as little tax as legally possible.